Hello, everyone. This is Kristen with the LTRC. Thank you for joining us for the 2021 year-end accounting checklist for law firms with our sponsor, CosmoLex, as part of the LTRC Industry Insight series held every Wednesday. Our speaker today is Erica Birstler. Erica is the Vice President of Product Communications at CosmoLex Legal, developers of the only fully integrated case management, billing, and complete accounting system specifically designed for law offices. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the specialized technology needs of a small to mid-sized law firms. Erica is passionate about helping legal professionals improve the way their law firms run, and she has given numerous presentations across America on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance to help spread her knowledge. All questions will be addressed at the end of the presentation. Please enter your questions into the Q&A pop-up found at the bottom toolbar of the Zoom screen. We are recording this webinar and we will be sending the video in a follow-up email. We will also post the video on our blog at lawtechnologytoday.org and YouTube. Our sponsor has provided a handout. You can find that link in the chat. It would also be sent to you through the follow-up email. Considering the current increase in Zoom usage, please be advised that we may experience disruptions during the webinar. Our recommendation is to close out of all other applications and to have Zoom open by itself. Thank you all for joining us. We'll now begin the webinar.
Thank you so much, and thank you everyone for joining me here today. So what we are talking about is year end. We're coming up at that point. I can't believe it's already mid-November, but as a business, of course, your year end activities very often involve accounting. So we're going to go ahead and dive into what we'll be covering today. So the first thing is we'll do the very basic overview, kind of that foundational review of what legal accounting is, which can kind of give you an idea of the realm of activities that we're talking about. Then we're going to dive into the year-end legal accounting checklist. So as mentioned, there is a handout, and that handout, which is currently in chat and will be sent afterwards, we're going to be providing kind of a top level overview of that, and you have that to take home with you. So it's a great tool to work with your bookkeeping staff, whether it be internal or external, to ensure that you're on track for year end and you're not rushing or frantically getting things together, whether it's the end of December or early January. And then lastly, we'll talk about how technology can help you in these situations. I think that when we think of accounting, technology is not the first thing that comes to mind. So the tools that you use, the technology, the processes can either help or hinder your overall accounting task or workflow that you have as a business. So we'll give some tips in regards to that as well. So the first thing I'd like to do is talk about legal accounting as a whole. Like I said, really setting that foundation. We may have all different types of people on the call today that can be lawyers, paralegals, office managers, bookkeepers, accountants, or those that don't really do bookkeeping or aren't specialized, I should say, in bookkeeping, but are responsible for it at the firm. So I always say education really helps in this situation. So with accounting, I like to put it into kind of three different buckets when it comes to law firms. The first is your business accounting. This is what every business needs to keep in mind. And this is what most of you think about probably when you think of year-end accounting. You think about your business reporting, like your profit and loss and your balance sheet and your budgets and your tax reporting, your expenses kind of factors into budgets as well for your firm, even setting those budgets for the new year. That is not legal specific. That goes for any business, but of course it's still important for you as a law firm to prioritize that. But there's two other pieces to here that always needs to come into play. One is your matter accounting. You do have different files and cases that you're earning fees and expenses, some that need to be reimbursed. Likely you have trust funds on hand as well. How your money comes in and it's allocated. Is it all income? Is there costs? What order is it allocated? Partial payments? All of that is something that other businesses may not need to focus on. And the third piece is compliance. So of course, it's dependent on your jurisdiction. There is some federal level compliance, but also specific to either where you're located or the type of law that you practice that could revolve around maybe trust account audits or legal specific requirements. Like I said, it could be related to how the type of practice area you're in and what guidelines should be followed accordingly. So this as a whole is what I consider legal accounting. So this isn't a fully inclusive list of tasks, of course. There's a lot that goes into these three buckets, but I think it's important to understand that, especially if you're utilizing staff that, let's say a bookkeeper or an accountant that has never worked for a law firm before, they might only have a third of the puzzle, possibly, maybe not. But you want to ensure that all three pieces here are working well together and that they're all prioritized as well. So we're going to launch a poll right now. The question that we're going to ask today is, who currently manages your law firm's routine accounting? So not just your taxes, your ongoing bookkeeping and accounting. Could be yourself, could be an internal non-bookkeeper staff, which is quite common. It could be an internal bookkeeper or an external outsourced bookkeeper. So we'll leave that up for a little bit. Looking at these results, all right. A good amount of you are doing these activities yourself. And then it's kind of evenly split between the remaining options, whether it's an internal non-bookkeeper, internal bookkeeper, or external bookkeeper. So I think what's really helpful about this is if you're doing it yourself, you may or may not have that knowledge. You might be, which is quite common, believe it or not. There are CPAs that are lawyers. There are people that have a background in bookkeeping or had another life in which they did financials. You're the exception to the rule. Most of the time when there's a solo or small firm where non-bookkeeper staff is doing the bookkeeping, they're learning on the job. They're kind of learning as they go. So hopefully this overview and this checklist will be really helpful to you. You may even be a bookkeeper who works, for a firm as well. So let's go through these at a top level. Like I said, this is not an all-inclusive list. We're not expecting you to master this by the end of the session, but it's meant to kind of help you when you take that checklist with you to say, okay, well, this is a good guide. Where do I start? Where do I at least see where I'm at this year? Like I said, it's November. So this isn't something to start looking at in January. Look at it today and say, okay, am I at least on the right track to having this wrapped up by end of year? So the first section we'll talk about, and kind of the first step, is related to your billing. Now, many of you might have routine billing. Maybe it's a monthly cycle, quarterly cycle. Some of you might do more of a fixed fee billing. So it may depend. If you're doing routine billing though, you should be pretty much on track because you're kind of forcing yourself to do that billing, let's say each and every month. But you want to keep an eye on your WIPs. What is pending? What is not yet billed at this point? Because you might have some cases that you're not billing regularly that you might look at those balances and say, you know what, I might want to get a bill out before the end of the year so I can hopefully maybe recoup this, reduce my AR, and obviously reduce your WIPs, hopefully reduce your AR if you receive payments on them, and maybe recoup some fee before the year ends. So that's something to think about. You want to review all of the time entries, ensure nothing was missed. And this is something that many of you are probably doing monthly, but regardless, you want to make sure all time has been captured, all expenses have been captured, especially those that you're paying out of pocket. So if you have any payables and maybe you forgot to book it to a client for reimbursement, that's something that would be great to capture and say, let me get that on the next invoice so that we can recoup that expense. And overall, you just want to make sure that you've captured what you can and run those invoices through December 31st. Like I said, if you're doing monthly billing, this should already be part of your process. You're probably doing a pre-bill review, you're sending those invoices out, you're keeping your work in progress low. But if you're not doing that, it might be a good time to kind of check in and say, should we bill at this point? You also want to apply any available payments. So it could be any type of funds that you might have on hand, because this will reduce your AR, your collections. I think a lot of this does come down to organization. If you have some sort of view in your accounting or billing software that lets you clearly see what is owed, what is not yet billed, what funds I have on hand, because you might have funds on hand that you're just not applying to invoices because you might not have a global view that you could see and know that you have that money that you might be able to apply. So apply whatever funds that you can. Like I said, reduces the AR and obviously reduces the collections effort that your team will have to put in. And look for any unallocated payments. You may have payments that are entered into, let's say, an accounting software, but never applied to an invoice. You might have an invoice that at some point was edited or somebody unlinked a payment and it never was applied back. So it doesn't happen often. It depends on the tools that you use and what your workflow is, but just to be mindful of that and take a look, say, hey, how is this going? That will help you to ensure that any payments that came in, you ensure that it is actually applied to an invoice. If you do have those unallocated funds that you don't know what they go towards, do follow your local jurisdiction, your local rules as to how to handle those funds in case they're client funds. You might need to return them to the client or a different solution. And then the outstanding or remaining AP bills. So your payables are what you owe as a firm. Could be rent, could be utilities, could be other things, could be matter-related items. Some of these are recurring, some of them are a one-time thing, but you do want to make the decision as to what you want to pay this tax year, because they might go towards your deductions in the current tax year, which might be beneficial to you. So this is more of a tax decision. You'll have to look at your financial standing as a whole, and then you might want to reference or speak with your accountant to make that decision. All right, next is, I like to call kind of the poster child of accounting, in my opinion, or bookkeeping, I should say more so, is reconciling. It is an activity that is very important, one of the most important accounting tasks, but it can often be neglected. And I think the reason why also it is a routine task for law firms, you really should be doing this monthly, especially since you have trust accounts, and it can often be put off. I'll do it next month. I'll do it next month. You don't want that to happen. The reason being is if you have any issues, any mistakes that might have happened by either the bank or internally, maybe with data entry, you want to get them resolved as soon as possible. The longer you wait, the harder it is to fix those mistakes or resolve those mistakes. So I definitely suggest checking in, especially if you use any sort of if you yourself, I know many of you are doing your bookkeeping, but if you are not, check in with that person and say, hey, when was the last time we reconciled? If it was like last month or within the last 2 months, great. If it was 6 months ago, we need to get to the bottom of that now, and we need to catch up, not wait till the end of the year, catch up now, so that we could resolve any issues that may come to light. So a few tips. For those of you, I might be, keeping it really simple, but I do like to, again, talk about the basics. Is it really comes down to comparing your bank statement and your books. So you want to clear your transactions. I know that seems like common sense. For those of you who have accounting software, this is usually included in that package. You'll see your book transactions, you compare it to your bank statement, and then you go ahead and check those items cleared. I often compare that to balancing a checkbook. I'm aging myself with saying that, I know, but for those of you who've ever done it, it's the exact same concept. So you want to make sure that you are clearing those off effectively, but even if you're using Excel or pen and paper, I personally always recommend using a software for these things. I think it helps tremendously with accuracy and efficiency, but if you're not, that doesn't exempt you from these activities. You still should be looking through that record. Hopefully you're keeping that record and compare it with what actually happens in the bank, because mistakes absolutely do happen and you want to resolve those. If you're highly transactional, I know a lot of real estate businesses, even title companies, they have thousands of transactions that they're looking through. So you want to be very careful when going through those, understanding that you might have transactions that are the same date, the same amount, and the same payee. So you want to keep a close eye on what those are and what should be cleared and what should not. And if you end up with a difference after you've reconciled, investigate it. It could be a mistake, like I said, either by the bank or internally. That's irrelevant, but you need to figure out what that mistake was so that you can fix it, as opposed to just saying, oh, I'm going to balance this with an adjustment and move on with my day. You cannot do that, especially with your trust account. It is absolutely unacceptable to do that. That's another reason why I do like accounting softwares, is because it will not, like most of them will not let you close the month if you haven't balanced. If you're using Excel or something else, you could do whatever you want. And you could be out of balance for months on end and not fix it, which obviously is an issue. The next thing is to looking at your aged transactions. By that, we're talking about things that have not cleared. It's totally normal to have items that are not cleared, but are they not cleared for months? Is it not 1 month, but it's 2 months, 3 months? Why? Did the check get lost in the mail? Did something never get cashed? Did you never send out that check to the client or whoever you're sending it to? That is the firm's responsibility, especially with the trust account. Until those items clear, when it is like in transit, that is still the responsibility of the firm. You need to investigate further. That can result in unclaimed funds. Let's say you have, which I mentioned earlier, it's very similar. If you have trust funds that you've attempted to return to the client and either they haven't cashed it or you've got a return to sender, every local bar has rules as to how to handle those funds and how long that process takes or how long you should wait. You want to record what happens with those unclear transactions. So if you voided something, if you did a stop payment, the reason why it's there is because you unlinked it from an invoice or there's some sort of record keeping issue, make a note. Usually there's some sort of accounting note or ledger note that you can make so you know exactly what took place and what you resolved. Referring to fees and interest. So this is for if you have any bank or wire fees, you want to make sure those are entered because that factors into your bank balance. If you're dealing with a trust account, ideally those should not impact your trust account. Those fees should only impact a connected business account. If you're not doing that already, talk with your bank to see if you can get that set up. Also, credit cards is another bank account you should reconcile. So, well, I say bank account, ledger, I should say. So you have your trust account, you have an operating accounts, and your credit cards are still a ledger. There's still transactions taking place. Many of them are expenses that could be related to your clients. You may have interest, you might even have rewards, credits that may take place on that credit card. You should account for that as well, because that does impact your balance. The matter links. So if you do have any of those costs, like I mentioned, or even invoice payments that should be linked to a matter, ensure those links are there. This is often a struggle when the billing and accounting are separate. So if you're using separate tools or even separate teams for receiving those invoice payments versus recording that deposit, you want to cross-reference those and ensure that the records are correct and they're applied to the proper items. And then when we talk about making adjustments, this is something that you really need to decide for yourself as a business. From a compliance perspective, like I mentioned, you can't just look at your reconciliation, see that it's off by a couple $100 and adjust the difference. Absolutely not allowed. You cannot do that because who's accounting for that 200? Which client does that impact? Who are you taking from to resolve that problem? You need to actually get to the bottom of what that particular issue is. But with business accounts, you may decide within a certain amount to make an adjustment. And that is for you and your accountant to decide. Might depend just based off of your entire financial picture as to what amount is acceptable to your business. Some specifics with the trust account. Just to keep in mind as you're, of course, reconciling, you want to confirm your client retainer balances. If you have the ability or clarity to see everybody in the trust account, you should, because it is a requirement to see everybody in the trust account and what their money is. You want to confirm that that matches whatever accounting records that you have. So like I said, if your billing and accounting are separate, you need to cross-reference those and make sure they're correct. Why? Well, because your billing record, you're going to use those funds to apply to invoices. If those funds are not accurate, you're taking money that might not be there. So it's very important to confirm that those records are making sense. And all of this, pretty much everything I talk about today could be done on a monthly basis. And that's the ideal situation, is to do these monthly or quarterly. But now, if you haven't been doing these, now is a good time to kind of get a head start on the year end. You want to look at your client's trust funds activity or trust activities as a whole. What money came in and out of that account? You can print your client's individual ledgers to see if that makes sense. Is that equaling out to the balance that they have on hand? Is that equaling out to the activity that took place in the bank account? Do you have multiple trust accounts? There are some firms that they might have one client with money in multiple accounts, or you might have switched from one trust account to another one throughout the year. Verify that the activity is correct in your records versus what actually took place in the bank. So it's reconciling as well. It's just looking specifically at a certain matter and what took place there, or a client. You want to run a three-way reconciliation report. For those that don't know what that is, it is you need to reconcile your records, like I already said, but you're comparing your book balance, which is the total for trust account A, total that's in trust account A in your books, total that's in there at the bank, keeping into account anything that's uncleared, but also adding up all of your ledgers. They should equal. If they don't equal, you might have that situation of the unallocated funds or unassigned funds that are in the trust account but are not assigned to anybody. And that could be very dangerous because you end up with this big pool of money and you don't know who it's for. And that's often due to just poor record keeping. You want to print and archive any reports. Three-way reconciliation is a very common report. Most accounting tools that are legal specific provide it. But anything related to your client ledgers, you might even do a disbursement journal, which is all of the money out of trust, and a receipts journal, all the money into trust. And you want to be prepared for an audit, basically. That's what I say. Know your local rules for an audit and have the proper documentation for that. And send an annual trust report to your clients. This is required in some states, not all, but I think it's just good practice. Send a report to your clients so they know what took place in their trust ledger. All right, year-end reporting. So this may or may not be your activity. Some leave this to more of an accountant, but this is for you to decide with them. But it's just reviewing your reporting, your balance sheet, which is your assets, liabilities, and equity. Look back on the past year and see if there's anything new, any new assets, any new liabilities. Maybe you took on a new loan. Maybe you purchased a office space or furniture. Are those accounted for? Keep an eye on the members or owners draw that might have taken place within the past year. Is there any depreciation that you need to account for based on the IRS schedule within the past year? So this gets a little bit more into the in-depth accounting side, but you can at least have these conversations with your accountant if you're not doing them already. With your profit and loss, you want to look at all of the different income accounts, make sure the income that comes in, usually most income is from fees and services. So it's usually through some sort of bill to your clients. Is that allocated properly? Are your expenses accounted for properly? Because you have your firm expenses, which is the payables that I mentioned, but you also have those client expenses that need to be reimbursed. They often are go to a specific client cost account. How is that set up on your profit and loss? And is that detailed appropriately? Also, your accounts receivable. You want to, just like I mentioned at the very beginning with billing, once you've done that billing, you're going to end up with a bunch of bills that are not yet paid. So you want to go ahead and review those bills. The point that I mentioned earlier is any funds that you have on hand, if you have the permission and ability to earn those funds, go ahead and earn them to clean up your accounting records. But then think about, okay, with what I have left, what do I want to do with this money? Or this balance, I should say. Do I want to, and what's the aging? Is it 30 days, 60 days, 90 days more? A lot of systems have your AR reporting that will let you know what the aging is on those balances. Some of them you're going to want to put collections activities for. Automate that as much as possible. See if your billing software has a dunning letter that can go out or a dunning email, recurring reminders that can go out that can seek payment. Look for maybe online ways of payment. A lot of services provide credit card or e-check payments online, which is a convenience to your client. It may help them to really get those balances down. Any write-offs, that should be the worst case, I shouldn't say worst case scenario, the last ditch effort. Like you've done everything you already could. The last thing you want to do is write off. But if it comes to that point, if something's been owed for quite some time, that's a decision you need to make as a firm. So it's a good time to really look at that and make some decisions based on how to recoup as much of those funds as possible at the end of the year. 1099s. So you work with a whole bunch of different vendors throughout the year. So you do want to, if you have an accounting software, have some sort of vendor report, which is letting you know what you've paid out to certain vendors. Per the IRS, it is anybody that you pay out more than $600. I believe that exempts credit cards. So any other bank account that you paid out more than $600, you need to file a 1099 for. So you first need to be able to pull a report of what you've paid those vendors out. Make sure you have the proper information, like maybe it's an EIN, maybe it's a social security number, maybe it's a tax ID, depending on what type of vendor it is. Do you need maybe name information, address information, whatever is required on that 1099 form, you need to make sure you have it. Now, these are due, I believe, the end of January, but now is a great time to make sure you have your ducks in a row. Do I have the information that I even need to file for these people? Because it might take some time to actually get that. Then in January time, usually, you want to go ahead and prepare those 1099s and either paper file, but honestly, most people e-file at this point. Some softwares have e-file functionality. You could also do that on a variety of websites, and sometimes directly to the IRS, and also the 1096, which is your kind of your combination. It summarizes your 1099s for the year. And some remaining activities regarding kind of what your accountant may do or you may do. It really just depends on how your firm is set up and the amount of volume or the expertise that you may have with the accounting. But one good thing is to run a trial balance. You know, they can see a summary of the general ledger, basically all of the different accounts, not, well, bank accounts is part of it, but your profit and loss and balance sheet accounts basically is your full GL. Run that trial balance and review it. You know, they can look at that report very easily, see if things look as they should, make adjustments if need be. Some accountants may want to shift funds between different accounts or fix incorrect postings. So very often it's just shifting, it's like reorganizing the records in a way that might make more sense or might fix mistakes that have been done in the firm. That is usually done in whatever accounting software you have. They do their journal entries that they need to do. And then you want to make sure that you close the books as of 12/31. So that is, again, another thing. It depends on the tools that you use. Most accounting tools have the actual ability to lock the books. So once all those adjusting entries are done and the activity for the prior year is complete, so this is all more so January, February activity, is when you want to go ahead and close out 2021. Softwares will just prevent entry in that time frame. If you don't have a software, it's more of you need to be diligent about those records you have and ensure nobody's making edits at that time since the accountant has already looked them over. And then think about your business and the growth of your business. Look at the performance and the trends over time. It could be more analytics, more business intelligence. What money is coming in from where, from what type of clients, what areas of law, what lawyers, are there certain lawyers or parties that have high AR and they're just not earning payment on their bills? Or are there those that are not billing enough of their time? Or are there those that could be more productive? All of that business analysis happens when you look at your financials as a whole. But I do other sessions too on like business planning, you know, coming up with goals for either individuals in your firm or the firm as a whole, and benchmarking. I think that's so important for people to understand, you know, what to achieve, where I'm at right now, and what do I need to do to accomplish those goals. If you're not doing that already, I do suggest taking some time before the new year to figure out how to create, whether it be measurable metrics, just quantitative measurements that can help you give you a pulse on the finances and also the productivity of the firm so that improvements can happen as the year goes on. And we'll leave you with a couple of tips here. These may seem pretty obvious, but let me tell you, sometimes it's something that we don't think about or maybe experiencing, you don't realize how important it is. The first is to eliminate duplicate data entry. So a few times I mentioned this may be in your billing record, this may be in your accounting record. We'll take trust balances for an example. If they're in two places, are they matching? Often they're not when I ask that question. And if you could reduce that either by streamlining that process as much as you can or having a centralized tool that handles both, that will help eliminate that data entry. I think often people think, oh, duplicate data is time consuming, but it also greatly impacts accuracy. You want to be mindful of your compliance. Everything we talked about with the trust account, that is the responsibility of the law firm, not the bookkeeper, not the accountant, not the client, of the law firm and whoever's name is on that trust account. So you want to ensure that you're always keeping that in mind with how you're managing your books throughout the year. Streamline your cost recovery. That is referring to when you pay something out of pocket and need to be reimbursed, make that workflow as flawless as possible, because if you don't get reimbursed for those expenses, it's directly out of your pocket and hits your bottom line. Sometimes those items don't even make it to the bill because they get lost in the mix. So take a look at how your firm currently is seeking cost recovery and if there's any areas to improve. Leverage legal specific billing and accounting tools whenever possible. A lot of practice management tools include both billing and accounting. There's definitely a lot of legal specific billing tools. There's really no legal specific standalone accounting tools. So I know a lot of law firms use tools like QuickBooks. Can you use that? Absolutely, but you need to be mindful that it's not going to stop you from doing the wrong thing. It's not going to stop you from overdraft on a ledger, or it's not going to provide you compliance reports, which if you're understanding and you're more diligent about it is perfectly fine, but you just need to be aware that that's the case. And then the last thing is the tools that you use. So this is, in general, usually these are the 4 buckets that law firms I speak to in regards to the tools that they use for their practice, for their accounting, either written, spreadsheets, generic accounting software, or they have a legal accounting software package. And on the left is just some basic accounting requirements: having reconciliation, being able to close your books, having trust account safeguards. And here's how they measure up. So take a moment just to kind of take that in, and you could use all of these tools to do all of these things. But some of them are extraordinarily flexible, like a written methodology in which you could do whatever you want or do everything completely incorrectly. And some are a lot more targeted or focused on the needs of a law firm in terms of accounting. So if you don't know the tools that are being used, talk with your bookkeeping team and figure out the different workflows that we've covered today, what's working well, what's not working well, and maybe technology could help you out as well. All right, that wraps up our session. One thing I do want to mention for those of you who may not be familiar with CosmoLex, we are a cloud practice management solution for law firms. That includes everything you see here. So you have your general practice management, your legal billing, and your legal accounting as well.
Okay, that is all the time we have for today. I would like to thank our sponsor, CosmoLex, and all of you for attending our webinar today as part of the LTRC Industry Insight Series. I would also like to thank Erica for presenting today. If you are curious about future webinars, please check out the ABA LTRC page or follow our Twitter at LTRC for updates. You can keep up with CosmoLex at CosmoLex Legal on Twitter or cosmolex.com. We will now conclude the webinar. Bye, everyone.
Thanks, everyone.